Hello traders, and welcome to our new webinar. Please let me know if we are live, if everything works fine. Because last time we had some issues, and even today I'm seeing that there were some errors with my stream. So hopefully everything will run smoothly for the next 30 minutes or so. Dan is here, Enes is here like always, so it looks like that we are ready to go. Okay, so as you know, we have seen some stabilization on the stock market. Last week. It was after Trump has announced a 90-day pause, but he announced a 10% universal rate. More importantly, we have seen changes on tariffs for electronic products, phones, chips, computers, and so forth, down to 20% on the imports from China. So looks like that Trump is making some step back here. He's trying to defend maybe the markets in general, especially because we know that these US treasuries and bonds have seen a pretty strong sell-off last week, and some are saying that that's because of China that is selling their bonds, and of course this makes US yields interest rates even higher, and obviously this can be very concerning for the US economy, especially in this situation. So maybe Trump is now making one step back and want to maybe take a little bit more time to negotiate before we have any kind of a final deal, but still keep in mind that we are still far away from any kind of an agreements here, and I still think that markets will be very very volatile and quite a lot of uncertainty over the next few weeks. Now what's the most important, as I said, is that we have this drop on the 10-year US treasuries. At the same time, obviously US yields are higher, but the US dollar is not higher, so there is definitely not a correlation that normally should be, and that's one of the reasons why there is some different reason for this market to move. It's not because of Fed will move on rates or because of inflation expectations. It must be something else, and as I said earlier, maybe that's because China is going to sell US treasuries, and this could cause a lot of panic mode if this is going to be true. So the US treasuries in general, from an Elliott wave perspective, this reversal is very, very aggressive. Obviously, we expected some limited upside because we knew that that's a 5-wave movement, but still it's a very big and sharp sell-off, which I think could even last a bit longer, or at least we could stay in consolidation here. But I don't believe that market will, or the interest rates will see any kind of a real explosion to the upside. If that would be the case, still I would expect that these interest rates will try to be lowered later on, because as you know, Trump is making some pressure on the Fed, and maybe Powell will be ready to cut rates sooner rather than later, and he will try to defend higher interest rates here. And this obviously could then mean that the US dollar will move even lower. Now we are looking here for on the dollar index. As you know, we have been turning bearish on dollar index here back in November and December, and said that most likely we are completing this ABC rally, and you can see that we already erased all of the gains here from 2023. Okay, so basically my minimum expectations for the dollar call for this year was that we are going to see a break below 100 level. Okay, we are already here in just a few months. Now the question is how far dollar weakness can resume. Well, if the stock market would really stabilize, if the Fed would really cut rates, I think that there can be even more weakness for the US dollar. And I think that from an Elliott wave perspective also, we don't have a completed 5 waves down here either into this wave C, which, by the way, maybe it's not even wave C, maybe something else. But for now, I will try to focus on the thing that what if this is a wave C, and maybe we will have to realize that maybe the dollar itself will stabilize around 94. But still, we need firstly these 5 waves down. So watch out for the next pullbacks. I'm looking on the 4-hour time frame. I adjusted the wave count here because, as you know, we have seen some serious sell-off here, but I just think that we are still missing this whole sequence. It's not really finished yet, and if I'm thinking that wave 4 it's about yet to show up, I just think that this recent retracement, it's maybe not that enough to say that that was a black wave 4, especially if you look at all of the needed subwaves here. So I mean, in my opinion, the next bounce could still prove to be corrective, and as I said, if stocks would really stabilize and turn to the upside, if interest rates will come back to the downside, I just think the dollar will stay under pressure. So here 100 level would be the first intraday resistance maybe for this week, for the start of the week. But then I think that later in the week we could possibly see that wave 3 will come to an end, that maybe higher degree correction will take place, and then I will be watching for a resistance around 101, or then even possibly around these levels 103, which for now seems like it's very, very far away. But we will see and try to track the price action very closely once we will have this wave 4 here in action. So for now, when it comes to dollar index itself, I usually use this as a proxy for euro dollar trades. Keep in mind that euro then obviously could be around the resistance. We have seen a move beyond 2023 highs, and don't forget, this Thursday, the ECB is expected to cut rates. So there have been some reports and mentions from ECB members that it's appropriate time to cut rates, right? And definitely because in these uncertain times, because of these tariffs, obviously they will look to support their own economy here in Europe. So if they are going to cut rates, it means that the euro could really see some pullback. And of course, this pullback would be just very healthy from an Elliott wave perspective. I would be watching this to be a wave 4. Now, the first support would be these highs from last year, around 1.12. Obviously, that's a very big level. Below that, we have 110.90. So after this wave 4, I just think that there can be more upside. Keep in mind that we already have some divergence here on the RSI, so we certainly can be running into some very serious resistance here. Keep in mind that we've been bullish for the last few months, and that was a pretty big and strong extended leg, so it makes sense to see some retracement here. But if you look at the big charts, keep in mind that we are seeing some serious break out of this downward channel. So really, maybe there's a plenty of room for this euro recovery to last, which once again could make sense after a pullback. If let's say the ECB will now cut rates, then we will see a pullback. Then Fed maybe will cut rates, and we will see a drop of the US dollar, and this would make a very nice scenario for euro to come to the upside even higher, especially if the same time stocks will stabilize. Okay, because in risk on mode, usually you would expect that these currencies will do well. Now, cable. This one, as you know, last time I said that maybe we are in a higher degree correction because of that very strong drop, but apparently that was an expanded flat. We stopped at this support level. It was not just horizontal support, it was also the trend line support, and now it looks like that we are rising here in impulsive fashion. So for me, I adjusted the wave count obviously per the new price action here, but still I'm not seeing any kind of a new ideas or opportunities here. I just think that we may not be that far away from resistance. Maybe we'll see a completion of this fifth wave sometime this week, but whenever we see a bigger retracement, I just think that still this pair will stay in this recovery mode. But I think that commodity currencies can be quite interesting. Why? Because as you know, if there will be no additional tariffs or some new changes from day 1 to day 2 from Trump, if there if there really would be some more appropriate language from the Trump administration, if I can say in that way, and if stocks will be able to stay in this current range or even maybe see some more upside, then I think that even commodity currencies will see this comeback. Okay, we know that commodity currencies, as in particular, has seen a very strong drop recently, and of course because it's connected with China. But if you take a look now on this price action itself, last week we said, look, we have a very strong decline, but keep in mind that moves is coming out of a triangle, and we know what that means. It means that moves out of a triangle are final in a sequence. Okay, so it means that typically this kind of a move will complete the higher degree bearish impulse, and so far what we are seeing is we have some confirmation here that low is really forming. I'm not sure if that would be just another free wave rise, but at this stage, when looking at just current price action, it's enough for me to say that, look, we have most likely minimum 3 waves up in play for now. Okay, so after a dip, I think that there can be some interesting support around 6200. I think that that could be quite attractive level for a potential new bounce, and I will definitely keep a very close eye on this one. And it's not only because of Aussie versus US dollar, because of this this price action that we are seeing right now here, that I'm thinking that commodity currencies can turn around. I just think that maybe there is time for euro, as I said earlier, to make a little bit of a pullback. It was performing very well, it was outperforming a lot the commodity currencies, but now if you take a look on these cycles, by the way, I also shared this on Twitter, by the way, we are live. If you take a look here on Twitter, I shared this yesterday. Basically, you can see that from a cycle perspective, okay, that's, by the way, pound versus New Zealand dollar, we can see that looks like that we are in very late stages of the current cycle. Okay, so it's not only the Elliott wave principle itself that suggests that maybe we are at some serious resistance here. We also have a channel. We have end of the cycle, even extended through this period for a bit. So I think that in the rest of the year, I really think that commodity currencies can see some retracement. Keep in mind that market have seen some very strong moves in the last few weeks, and a lot of potential recession risks have been already priced in the market. So if this will now stabilize, I just think that there you will see a massive reversals that could even last here. Okay, so I really think that there is a chance that commodity currencies such as Aussie and Kiwi can do well. And that's, as I said, pound versus Kiwi, but here we have also Euro Aussie. You can see that this one also can be in a very late stages of the current cycle. It's basically, I mean, it's a perfect when you look at the previous cycles. Of course, it will not be on the same day, same week, same month, but at least you can see in which kind of a stage of the current trend we are here at the moment. Okay, so that's why I'm saying that maybe commodity currencies could be quite attractive here in the next few weeks, few months. Now looking at dollar CAD, as you know, last time I said that I will be looking for longs on dollar CAD. I have been stopped out here because market had made a very strong reversal to the downside. I thought that we will stabilize a bit because I've also seen that that US yields have been doing quite well at the time, and the crude oil have been turning to the downside. Obviously I was wrong on this one, and now when I have to adjust the wave count, and obviously what we see is a very strong drop, and we basically closed and finished the week at the lows here. So in my opinion, there is chance that this market will continue even lower until these 5 waves downs are finished. I think it would be just too soon to expect a change in trend unless we see a break and another now new invalidation level of this bear trend at 141.40. Then obviously things will change here, and we will most likely adjust this to be a wave B, and maybe that was even some kind of a wedge with the current throwover formation. But for now, I just think that it's a bit too soon to call this kind of a scenario here. Now let's take a look also. Oh, by the way, as you can see here on my notes, we have the Canadian CPI and trade decision this week as well from Canada. So definitely maybe it's time to be on the sideline for now on this one. Now let's take a look on dollar Swiss. As you know, Swiss franc has made some very serious move to the upside. We have seen dollar Swiss franc breaking to new lows here. Swiss franc in times of an uncertainty, it's seen as a safe haven. Okay, and there were even some speculations that maybe Swiss National Bank is going to intervene in the markets. In fact, they can be already intervening by selling Swiss franc, but the question is who is buying the Swiss franc, right? There can be a new institutions, new financial institutions that are buying these Swiss francs because of safe havens, and that's why maybe this trend will not be reversed that easily in this kind of a uncertainty when you have a lot of volatility with the stock selling off quite dramatically here. So I think that this, for now, this trend will still remain in play, and I just think that after any kind of a real ABC formation here, we could see further sell-off. I would be watching the previous lows here to be an important resistance around 83.30 up to 84 level. Now let's take a look on the S&P 500. Now the S&P 500, when looking here at the 4-hour time frame, well, we have this ABC down, which we can count it as a completed, but then for now you still have only 3 waves rise. So as I've been saying to our members, it's definitely too soon to turn bullish, especially when you have this resistance that was very nicely retested 5,500, and then we have seen a sell-off. So what is really important that we move beyond this resistance, and then we would be able to count 5 waves up from that lows. Okay, in such case it would be totally different story. Then I think that we would label this as a potential leading diagonal, and after a retracement we could expect more upside. Don't know if that would be just another ABC movement or something else, but it's definitely something that is needed to completely invalidate this recent sharp drop that occurred from start of April here. Also, sometimes will be very helpful if you will take a look on the cash markets, okay? Because here we can see that we have some gaps that are still open, but notice that they are open above, okay, not below the Friday close. Okay, so here was one, okay, and here is also the second unfilled gap, and this could be very important, like a magnet zone, and then maybe we see some kind of a resistance. So this would actually be matching perfectly with the leading diagonal as a set, and then you see a pullback after this gap is filled. So I think that overall stocks are showing some signs of life here. Maybe we'll see more upside, but even after this leading diagonal as a set, you will see some retracement. I don't believe that market will move straight to new all-time highs. But what is really interesting here, okay, that, as you know, last week we said that we have quite extreme in volume. For it was the most since what, from from the last 2 years, and then you also you had these weeks that moved into these extreme levels, and we know what happens usually at the extremes. Plus we have stabilized at this trend line support. So at least for the short term, if we get this as I said, leading diagonal and then a pullback, I just think that more upside here is really possible, if not probable, on the S&P 500. By the way, guys, make sure to press a like if you're watching this on YouTube here or any other social channel, so that we will be listed on higher on the YouTube and other channels. And also, if you want more of the analysis, make sure to visit us at wavetraders.com. Now let's take a look on gold. So last time when we spoke, I said that gold hit some important resistance. I was expecting deeper retracement, which per the price action that we have seen back then, I would probably label, if we will see a new kind of similar decline that can be counted in 5 waves from that extremes, I would possibly do count it as a start or the beginning of a new correction. Unfortunately, the markets and the Elliott waves in general is nothing is 100%. You won't have a 100% clear wave structure, so we have to adjust when needed. And what I'm looking at right now is that gold is still can be trading in a fifth wave here. We are seeing the potential throw over and retest of the channel, maybe even some more upside here could be seen towards 3,300, as you know, which is maybe the next important round figure. But when it comes to metals, as you know, I'm bull on metal and even more confident that metals will rise when we have both gold and silver moving in the same direction. And what's quite interesting that last week we have seen both gold and silver recovering. Okay, so if you take a look now on gold silver ratio, this one is basically has hit this resistance above 104. Now if you look at the clear wave structure, okay, so if you look at gold silver ratio from an Elliott wave perspective, you can basically see that's a very strong drop, that's a counter trend movement. But those ratios, keep in mind that they are moving in cycles, okay? They are moving something like this, okay? You will see something like this, okay? Ratios won't move just straight to the upside unless you compare them with Bitcoin. But overall, ratios are moving something like that, right? And what I see right now is that we are at the upper side of these potential cycles. So to me, it suggests that maybe the gold silver ratio is about to turn to the downside. So what that means? Normally it means that they can both stay in uptrend, gold and silver, but in this time gold silver ratio will move to the downside. Silver will outperform gold. Okay, you can see the previous examples here. Gold silver ratio moved to the downside, silver exploded higher. Here we had again gold silver ratio moved into a correction, silver moved to the upside. Then we have seen consolidation on silver when gold silver ratio moved to the upside. But if I think that gold silver ratio is now at extremes here and this cycle will change, then maybe now is the perfect time to keep an eye on silver and what will happen here. Also, if you look at the silver from an Elliott wave perspective, notice that we have only 3 waves down from that highs here. So these 3 waves suggest that it's a counter trend movement and that most likely we will stay in recovery mode and at some point even break above this October 2024 highs. So watch how the price action will unfold on the smaller time frames. If we will have clear 5 waves up, that would be another indication that we are really bottoming. I'm not saying that gold will stop up here. I'm just thinking that even if gold will stay in uptrend, for me, from Elliott wave perspective, from other different things like gold silver ratios, I just think that maybe silver is much more attractive if I have to choose between them. Okay. Now let's take a look on some of the single stocks. Here is nvidia. As you know, nvidia broke below 100. We have been looking and tracking firstly for a potential triangle, but looks like that because we bridged these swing lows here, that this can actually be as part of an expanded flat correction where you have the diagonal in wave C. But an alternate scenario suggests that what if that was a leading diagonal and you will have only wave B rally? Well, in such case, wave B should be made by 3 waves, right? But even this alternate view suggests that we have this uncompleted recovery then. So I don't want to be too smart and say that we are going back to all-time highs from here. I just always want to look at the price action and analyze step-by-step moves here and structures. And I just think that there is a real chance that nvidia could gain more, and there can be even some opportunities if we'll see any near-term retracement here on a smaller time frame. But that's good for technology, as you know, as I said earlier, that there were some changes on tariffs, they were lowered on electronic devices and chips, and that's why we are already seeing this market ticking higher in pre-session here. Now looking at also at MD, where are you? This one also has seen a very strong drop lately. I adjusted the wave count here, and I think that this could actually be now, or that was a range last year from April till end of October. It was a very unclear price action back then, but now when I look back, it could be seen as a running triangle here for a wave B. More importantly, that was a very strong drop into this very nice supports. Okay, it was not only that, it was this support here. Okay, so that was pretty interesting support, and notice that that was also wave C that equals to wave A to the in that region, and now we are trying to stabilize. So I think that there can be some more upside. Not saying again that we are going straight to all-time highs or anything similar, but I just think that there is time for a potential stabilization and further some recovery in the next few weeks. Now if we take a look on Google, this one has made an impulsive sell-off, some very nice support here that failed. Now we are seeing that firstly failed, but now we are seeing a reversal back above the previous support. So I think that even this one has a chance for a free wave recovery that can take us back to the previous fourth wave. Looking at my notes here, eBay, this one, my opinion, also quite interesting. Okay, that can be a wave 1, deep wave 2 retracement, then you have an extended wave 3, and now a new consolidation, which, because it's some kind of a range here, I just think that it's a wave 4, and it's still we have unfinished business on the long side, and that this triangle, maybe it's the best choice at the moment. Looking at Microsoft, just a second. Looking at Microsoft, last time we discussed that most likely we are going to see further weakness because we had unfinished 5 subwaves down, and now it looks like that this structure can be coming to an end. We also retested this previous swing supports, and now we are reversing higher quite nicely, so even this one shows possibility for further gains. Now final stock, I want to look at the MicroStrategy, this one on the log scale. Basically didn't change much for the last for the last 2 months, but I'm surprised that it's holding up quite well, okay, since April 1st. Okay, we didn't even break below this previous swing low from March, while, as you know, the stock market really moved extremely to the downside. So in my opinion, this suggests that if stocks would really, single stocks or stocks in general are really going to stabilize down here, that MicroStrategy could really do well. And in such case, you could expect that Bitcoin will also recover. And we have seen a retest of these previous old highs. Now we are trying to reverse. These are the futures, by the way. And now we are testing the upper side of this potential corrective channel. And what's the most important is that this drop can be definitely counted, and corrective price action can be counted as a WXY because of plenty of overlaps in 7 swings, or even if you adjust the wave count, can be even a triangle here in wave B. Okay, but I would expect, if I have to guess, in the short term, that maybe we will see 93,000, 94,000 at least with 3 waves up, and then we will try to figure the next right wave count once we will at these levels, because that would be my minimum expectations. Looking at the Ethereum, Ethereum still holding this support, but I'm not really convinced this wave 3 have all of the needed smaller subwaves here. The alternate views suggest that we could be trying to complete the wedge. So what's important for the next maybe few weeks is that sooner or later we can recover, but maybe we'll recover only temporarily for a wave 4. In such case, I think that 2000 it's a very important level, very important round figure. So for a bull run, you want to see a decisive break above that price, rather than seeing the price turning down from that resistance. And final market will be looking some questions. Yes, and the final market will be on the Ripple here for my list. Last time we said that 1.5 is a very important support. We came quite close to 38.2%, and now we are reversing. What's the most important when it comes to the wave principle or analyzing the corrective price action is that you will not always have all, or you won't always be able to successfully track or label all of the subwaves within corrective price action. Okay, that's why sometimes channels can be very helpful. Okay, so it doesn't matter what kind of a price action is really unfolding here in this pullback, but it's important for me to see that if there are overlaps, and if we see in a final sell-off that the lower trend line support of a corrective channel really holds, and then you see this kind of a strong reversal, well, this is another indication that bulls are trying to fight back, especially when we have the price trying to now recover and maybe even remain above the upper side of this channel. So we are above the middle line here. But if we start approaching and even break the upper trend line of this corrective channel, then in my opinion it would be even more significant to say that, and important to say, that wave 4 has really ended. So what I see right now, and after this very strong drop that was very quickly reversed, I just think that there is real chance that sooner or later Ripple will be trading back at these levels, because clearly I can count this as a corrective movement rather than some kind of a impulse, especially when you have this bounce happening right now. It would be a different story if we would have something like this and the market would sell off and maybe close last week around here. Okay, then I would think twice about what's coming next for Ripple, but now this time that's totally different story. Okay, traders, I hope that you enjoyed this video, this webinar. Just a second, wait, Dogan is asking for DAX. Okay, I can look just last thing for DAX, because I know that someone was asking for DAX already last week and week before. So okay, so German DAX, it has seen a very strong move here to the downside because it's a strong decline. I just think that we have to focus on the Elliott wave structures, and if I have to buy German DAX and look for potential opportunities, then I would rather wait on this ABC drop. But now we are at some support here and already are seeing a recovery, but not sure about any kind of a real move to the upside, let's say back to all-time highs from here, because we can see some slow price action, and so far even with 3 waves now. But maybe this will be a leading diagonal if we see a retest of the 61.8%. But I still think that after this push into that area, we could see some pullback later on within this ongoing wave B. So when I look at German DAX longer term, I'm expecting, definitely I will expect more upside, but once we will have very clear pattern from an Elliott wave perspective that would confidently allow us to turn bullish on German DAX. Okay, but at this stage I'm just more neutral and just realize that higher we go, that maybe still there can be some resistance around 22,000, maybe very important one for this week. Okay, traders, thank you for watching this webinar. Thank you for being here, and good luck this week. Talk to you next Monday. No, next Monday. I think that we have holidays, but we will see how we will schedule the webinar. So make sure to put your notifications on here on YouTube, and that you will subscribe to our channel. Traders, bye.